All right, guys. So a big hey now for everybody. I have turned on the recording. We've turned on the recording. We're going to record this AMA. Um, yeah, what is it? Today is April 23rd, 2025. Appreciate everybody joining us. Today we have our guests from the Actuator protocol, and we're going to get into some questions and hopefully some really great answers. And then this tape or this stream will be provided to others to review afterwards. And so with that, I'm Crispy Man from Hexfire.io. I think people know because I got the invitation. And then why don't we start with you, Mr. C3 Works? Quick introduction.
Sure. Yeah. Well, nice to be here. Thanks for having us. We got a pretty good part of the team here. I'm C3 Works. A lot of folks know me as Bill out in the different spaces. Either's fine. Respond to them both. One of the co-founders, along with RJ, who's here, of the Actuator protocol. And would love. I know some of you, at least that I recognize, do have a basic understanding and maybe even a pretty good understanding of the Actuator protocol, what it's doing. So we're happy to address content from the entry level. You've never seen it before. What is it? All the way to the advanced kinds of questions you might have if you're a more experienced user.
All right, thank you. Hey, Boxy, you won't have anything you want to say?
Sure. I feel like RJ should go next because he's one of the founders. I'll just do a quick one. Yeah, I've been working with C3 for about 5 years now in other capacities, and I was they with Actuator as they were developing it. Sometimes we would bounce ideas off each other, and so I was sort of a consultant, I guess, quote unquote, as it was developed, and now I'm supporting Actuator. I wasn't one of the developers, but I do data science, Python development, all that stuff. So yeah.
Right. RJ?
Yeah, Crispy Man, thanks for having us all on. So yeah, as you guys said, I'm the developer. So I did the smart contract development as well as the web app development. And yeah, I mean, throw us your hardest technical questions you got, and we're happy to answer them. I think there's the protocol. I think we are starting to see kind of the fruitfulness and kind of the long-term vision starting to to play out here. And so it's cool to see things kind of, in action, the protocol. So yeah, if whatever is kind of preventing you from kind of having that aha moment, and hopefully we can get that to click. And so yeah, shoot us your questions.
All right, great. Thanks. I definitely have my had my aha moment, right? Which is why I keep talking about Actuator and bringing it up. I'm very much a hex maxi. Yes, I'm involved with a lot of other weird stuff, right? Um, that's my crypto journey. However, I'm very much a hex native staker kind of maxi, dabbling in the HSIs, all that kind of stuff. So this intrigues me a lot. This protocol intrigues me. There's a couple of things I would say right out of the gate. So first off, I'm not part of the team or anything. I have no interest in Actuator other than the fact that I'm now using it. Right. So this is me coming at it from a user. So my motivation, and we'll get to show this, I think my motivation is this idea that I now have some things I can do with Hex that can earn me some pretty good reward at a very limited risk, almost no risk. And because of that, this interests me, right? Because I like 100% APR, and that's my super bond theory. Okay, and so there's an opportunity for people who want to get involved in all voluntary DeFi, blah blah blah. So, yeah, I'm involved, and I will give you. I should do it anyways. I'll give you props on the interface. Once I had time to really digest it and start using it, it does move very smoothly, right? And very, very logical for me to know what I'm seeing and how it's working, right? And so we have that. Um, let's get to, so my motivation is I want to be able to do stuff with my hex to earn more hex. That's my motivation. What was your guys' motivation, either you, RJ, or Bill, for why was Actuator put together? Why did you do this?
Well, why don't I start with that? It rolls back to I was a day one Hexagon. I'm deep in Hex, love Hex, did it from pre-launch and then launch. I like to say I did day one, I did day two, I did a lot of things along the way. Bought the top, bought the bottom, did a lot of things in the middle, and like like all of us that were
Yeah.
involved from that point forward, been through all the dramas, the big payday, the various thises and that's, won't go into them. But with that body of experience and having accumulated a set of positions that rode up, rode down, and did all kinds of things with, and staked quite a bit, uh, I remember the experience of feeling like after the run up and the run down, there was a sense of powerlessness that it seems like it would have been good to have a little more nuance over my portfolio. Uh, I had the sense that maybe I overextended too fast. And I think a lot of early Hexicans sort of felt that way after the run up and then the run down, and the sense of, you know, I know that it's a feature, not a bug, to tie things up, delay gratification, all the nice narratives and realities that the Hex protocol gives us. That's true. But there's still a spectrum there. Coming out of TradFi, which is what I do, coming out of traditional finance, used to working with large capital on Wall Street and doing fairly sophisticated sorts of strategies, that meant we had some ability to manage the risk in our portfolio.
Mhm.
And if you can't manage the risk in your portfolio, then the way traditional finance or larger money manages the risk is to reduce the allocation to it. Just make smaller contributions and don't get as involved because you can't manage your risk.
Right.
So my inspiration was to say, I like having good exposure to it, but it would have to be with some ability to manage risk better. Otherwise, I wouldn't have a choice except to just plain reduce my exposure a bunch. But that's not what the community wants. You don't want people deciding to limit their exposure to Hex to something small simply because they don't have
Hmm.
any ability to manage risk. And so when I've known RJ for quite a bit. He comes out of TradFi as well and enterprise software development, which is why he can create such excellent front ends and performant apps. So we began to talk about this, and he got involved with Hex as well, and we began to contemplate what would elegant risk management tools look like, comparable to the kinds of things we have available in TradFi. And if we did have, might attract larger capital to the ecosystem. So that was the ethos and the genesis. And of course, we went down different paths and ended up where we are.
Got it. Well, yeah, I agree with you in the whole risk thing, because really what I'm doing is if I'm going into staking, I'm YOLOing. Like, well, maybe this will work out. I don't know. And I did depend for a while on the obviously on the rewards we were getting from Hex, in that they were going to be constant, and that mitigated risk for me, right? So I was willing to put, 10,000, 100,000, a million hex out, because I knew I was going to get 10 times as much, right? Now that's all changed a little bit. I mean, it's still there, but clearly my earlier stakes will earn a lot better than newer stakes for quite a while, right? Now, what I'm really super intrigued with, well, for me personally, I have my own hacks, right? So I'm intrigued about what it can do for me. But longer term, I can begin to see and understand how this could attract big money.
Well, right. And again, I said I come out of TradFi, but both of us come specifically out of the institutional bond market,
Hmm.
where you're managing risks associated with encapsulated cash flows. Does that sound familiar?
Yes.
So there's a lot of parallels there to what we're doing here in Hex, and parallels with improvements, I might add, which I think you might have been the one that coined the phrase super bonds, which is kind
Super
of cool
bond. Yeah, yeah,
because
that's just my limited understanding of things, and how this relates to bonds. But yeah, 100%.
yeah, it's not a perfect analogy, but it's better than any I know because it does have the encapsulated cash flows that can be traded or used as collateral or whatever. It has that component captured, but it has the improvements over the traditional bond market in that Hex is an actual underlying asset without any counterparty risk. unlike bonds, which are liabilities that involve counterparty risk. So the risk management strategies still apply in some ways, although you don't have things like credit risk like that a bond market would have because you don't have the counterparty here. You have smart contract risk, but once you can discount that as reliable, then that's off the table. But you still have liquidity risk. You still have what I would call risk. The types of risks that structure would bring to me, and the things of that nature. And you have to be paid to take those risks. And payment usually comes in the form of yield. And when that yield changes, your risk profile looks a little different. And that needs to be sculpted if you're a professional investor.
Got it. All right. So I know this is some pretty detailed stuff that we can get into. Um, how about we take on either you or RJ, just give us a brief explanation of what powers this whole actuator system. So in other words, I guess I'm thinking about HSIs specifically. What is the role of HSIs here?
Well, RJ, maybe I'll pass that to you if you're okay starting, and we'll bounce back and forth.
Sure, yeah. So in terms of how we use HSIs, it's the main purpose there is to use the fact that hex stakes are now NFTs. Because if hex stakes aren't NFTs, then it limits us in terms of what we could do with the protocol. So, for example, our protocol doesn't support native stakes because we can't. We need a way for we need a way to limit what functions you can and can't perform on a stake, and that isn't really technically possible with a native stake because it can't be transferred from one smart contract to another like an NFT. But now that hex stakes are NFTs, thanks to the HSI architecture, you could delegate your HSI over to the actuator contract. And then once it's delegated, you could start to mint tokens against it that represent ownership in the HSI itself. So we really needed the HSI innovation in order to build, this other layer on top of that to make this protocol possible. But yeah, but Bill, I'll leave it to you to give a high level overview of its purpose.
Okay. So in this case, for those who may not know, HSI stands for Hex Staking Instance, which is a process of creating a stake that is actually contained within a container, an NFT. And that is something that came out of the Hedron system. And so when I'm working with Actuator and I take my HSIs and I actually delegate them and take or possibly mint HTT tokens, it is still my HSI, correct? It's still mine.
Yeah, right. It's still your HSI, and you have full authority over what you do with it, and you could withdraw it from the smart contract, and you could send it somewhere else. What the actuator protocol, what it does when you delegate it though to the protocol is it places certain limitations on it. Like you can't emergency end stake it if you've extracted these, we'll introduce here in a minute, but if you've extracted these fungible hex time tokens against it, then the protocol will limit you in terms of what you could do. But again, that's all reversible. So if you return the tokens that you've loaned against the HSI, then you can again do whatever you please with the HSI. So it's still yours. It's just the custody of it has moved into a separate smart contract and has placed certain limitations on it. But it also places new capabilities upon the HSI, which is, for many users, those new capabilities, just increase the versatility of your HSI.
Right. And my simple view in this is when I put my HSIs up, um, I'm based on the amount of hex that I've already earned and what I have in the HSI, I'm able to mint a certain number of HTT tokens. And that represents, quote unquote, the loan, right, of value that I'm taking from myself.
Yeah, let me step in there for a minute. That's exactly right. So you have your HSI, which is the underlying asset. It's native hex based. We know rigorously and conclusively what rewards you have accrued to date. right? Because that's what's computed based on your principal plus accrued rewards to date. That's available in the Hex UI. It's available in ours, so you can see it. That is always accessible to you. So it can be on any given day. You could go and you can do partials, you can do whatever you want. You've got full control over the use of the actual rewards and principal that you've earned. So take it out, put it back, think of it like a revolving door that you can do what's helpful. But as long as there is an outstanding encumbrance against it, then it's controlled by the actuator protocol so that you cannot do something that would break the math for the system.
Perfect. Yeah, and what I keep saying over and over again to people is one HTT is one hex in the future. So on the date,
Correct.
it's one hex in the future, and I think that's a key point to where we look at some other aspects of this. We look at the farming and whatnot. It's pretty important to understand that over time, may not quite get to one, but the value of one HTT will equal one hex in the future for sure, certain. That's how it's designed. When I say it may not reach 1 to 1, in terms of trading on the market, it'll probably always be at a discount right up until the day. But it's possible it can go higher, right?
It gets
Well, yeah, I
closer.
could, but go ahead,
Time it
Boxy.
gets, yeah, yeah, sorry. Over time, it gets close. It should get closer and closer
Mhm.
to 1 to 1. So I like to think about it as HTTs. The way I simplify it is HTTs, hex time tokens, are hex. They're basically just hex. There's a little bit extra risk, but it's hex in the future, just like you said. So it's as far as trusting this protocol, quote unquote, um, there's no additional token that you need to have to use the protocol. It's just hex. HTTs are just hex. That's kind of how I think about it.
Yeah, and I think it's important to say that because people are going to get confused when they see 3,000, 5,000, 7,000. I'm speaking. I'm sorry that I'll say this about myself. I'm speaking for myself, right? I was confused, right? I was like, what are all these numbers? And then of course there'll be 4,000s and 6,000s, and then some guy made seven, whatever number he made. I forget what number it is. Some guy made some other one, but this is again. I know, guys, anybody listen to this, you're not familiar with like the bond market, and I'm not an expert at all, but apparently this is what goes on. People trade different types of bonds. It's kind of like options in my mind, a little bit. Not the process, but the idea that I can go buy an option for something because it has some intrinsic value that somebody believes it has, and then I can go trade that back and whatnot. Very similar in that kind of fashion. That these HTTs, because they're all linked to hex, they're all going to be equal to hex at some point in the future. And so then it just means that you have this opportunity to use HTTs if it fits whatever your strategies are.
Yeah, and it's not that dissimilar conceptually from an HSI in this sense. What's an HSI or what's a hex stake, even a native hex stake? What do? You take some amount of hex that we call our principal, and we interact with the hex protocol. That hex gets burned, gone, out of the system. Supply comes down, right? That's what happens. And what you get is what we call a T share. And that T share is what? It's a basket that sits there and accumulates future hex. We call it present hex, but it's not because the hex isn't actually minted. It's a marker for a batch of future hex you're going to get one day. And then when you interact with the contract, it delivers. There's a similarity, not an identicalness, but a similarity there with the HTT in that you have something that is going to exchange one for one by the protocol and mint and hand you. Now, it's not minting the hex like the hex protocol does with the HSI, so there's a distinction. It actually has control of an existing hex that comes back to you. But both are like a time capsule for future hex that's going to unlock on a given day, and poof, you're going to get the hex.
So naturally, I think maybe the next question is, okay, so what? So I have these HSIs, right? And I print these HTTs. So what do I do with an HTT? Well, so what's the purpose of an HTT?
The HTT is what enables you to have liquidity. Now, the answer to what do you do with an HTT depends on which side of the market you care to be on. And that's an important point is that the
Hmm.
HTT market represent the coming together of a buyer and a seller of an HTT that have different objectives, and they have to agree on price that clears the market for both of them. If you're the seller of the HS or the HTT, you came and you deposited or you delegated an HSI and minted your HTT, and you're selling it. Why are you doing that? Because you want some liquidity. That's why you did that. And so you're going to sell the HTT to somebody else, and you're going to take the liquidity and do whatever it is you had in mind. Now, who's on the other side of that market? Somebody was the buyer of an HTT. Why do they buy the HTT? Because it's future hex discounted today, such that I have a guaranteed locked in fixed rate in native terms, rate of return that can't change. So now we've got a marketplace of this token where it's all native hex denominated, and one side wants the liquidity, the other side is willing to provide the liquidity by being the investor. And
Yeah,
they
I think
agree on a given rate.
And if
I'm agreeing with you that I like the two. I like that presentation. That on the one hand, you have the sellers of HTTs because they minted and they're able to do something, sell the HTT, and then on the other hand, you have buyers of HTTs.
Who
and
want to
so
accumulate the yield. Yeah.
I have a liquid hex bag, for example. Why wouldn't I just at least a portion of it put it into
Ah, we're gonna
HTTs?
get there. Yeah,
And
yeah.
the other thing I wanted to say is if hex time tokens are relatively undervalued on the market, you can define that how you want. You buy them, all you do is you just go to PulseX and buy HTTs and you get discounted hex, redeemable one to one, right? But if they get overvalued, you have some HSIs you've already made, mint HTTs from them if they're overvalued, and then sell them on the marketplace. So it's like C3 was saying, it's a market. You can get into like all sorts of complex strategies and stuff, but that's the if they're undervalued, it's good. If they're overvalued, it's good.
Yeah. I agree with you because like I think it's important for us to understand again the buyer seller kind of an idea because here's the thing: my motivation to go make HTTs with my HSIs is a different type, could be different, might be crossover, but it's a different motivation than why I would go buy HTTs off the market. All right.
Yeah.
So it's a different motivation and there's a different set and there's some Venn diagram you could show where this all comes together. But I think it's really important because as a buyer of HTTs, I was like, why would anybody make them? So why would I
Well,
make? So let's talk about that. Like what is it when we say liquidity? Let's put it into terms like what you guys do with Actuator.
think of it this way. Everybody has different risk profiles in their portfolio based on what positions they've taken, how many positions they've taken, where they've taken them. Uh, they have a lot of different things that drive what they call risk. If you've taken and positioned heavily, then you might find yourself wishing you could draw some liquidity just to reduce your overall price exposure. So one example, so that's what somebody could do with the HTT. If they felt like, gee, they're very heavy and very extended, and they wanted to reduce some of their risk to a bear market, they could draw out some liquidity and liquidate it into USDC or anything else they wanted to go into.
I
And
think that's key.
they would have the ability to sculpt the risk down a little bit. Or maybe it's just a lifetime emergency. And they, if you've ever had those, and we know we have them because people emergency end stake, which is really brutal. This is a more elegant way to do that.
Said a little maybe differently or just from a different perspective. So crispy man, suppose everybody had that mindset of just like, why not just buy the HTTs? Why do anything else? Is that maybe kind of what you were saying?
Well, not specifically, but sure. I mean that works. I
Sure.
just think that when I was coming at it from one direction, I just understood there's a difference in the mindset. And I think like Boxy, I think Boxy, you're the one that said this. There's very complex strategies at play here. We can get really detailed into like, well, what if I want to do this? Before you move on, I'll just mention this about what Bill said. Okay, I believe in Hex. I believe Hex is going to be super valued, right? My HSIs are Quattro Cinco. I'm not ending those, right? There's no way for me to end them without losing. So let's say, I'll pick some incredible number. Hex goes to $10, right? I can mitigate my risk for the next bear because I'm going to expect there's going to be a bear, right? I could actually print my HTTs, swap them on the market at the top into a stable and hold for the bottom.
Yeah. Yeah.
And then I can go ahead and reaccumulate more of those HTTs at the next bottom. That would be an example, even though I'm not trying to promote trading. But I mean, the reality here is kind of like what Bill's saying, is a lot of us we round trip stuff. Um,
Well,
so go ahead.
yeah, remember, it's not a binary choice. It's not as though you're an investor or you're a trader. That's too simplistic. Uh, Holding everything to maturity and never doing anything is a strategy, but it represents one end of a spectrum. The other is you could be the wild, crazy speculator day trader that's always moving in and out. But most real investors start with a certain structure, and over time they make some adjustments. Maybe they overweight this and underweight that. Maybe they have a change in their life circumstance and they have to rebalance a little bit. Maybe a lot of things. But the fact that you do some adjustments to your portfolio over time doesn't make you a trader, right? And so this lets us get in the middle of that.
Yeah, 100%. I know we're going to circle back to a lot of these things again and at different levels, but we'll peel the onion.
Yeah.
Um,
There's one interesting scenario just at a high level to play out in our head because the market, I think we can predict how the market responds under different circumstances. And so one is that if everybody just was interested in HTTs, like, oh, I don't need to make HSIs anymore. I just buy the HTTs because I get fixed returns in HEX. Um, if everybody had that mindset, suddenly HTT prices rise relative to HEX to the point where your yield on your HTTs gets smaller and smaller, right? Because they get closer to the price of HEX. And then it puts pressure. The market is incentivized then to increase the supply of HTTs because there's so much demand. And then once the market is incentivized to create more HTTs, you can only make HTTs by making new stakes. And so new stakes come online, more HTTs come online, HTTs sell off, and then suddenly maybe HTTs are underpriced. And so you have kind of this like this virtuous cycle where, as the market overcorrects, it resolves, and on net, it increases hex staking, it increases hex supply that's being taken offline because more HTTs represent more hex that's been taken out of circulation. And so I think that there's just this interesting kind of game theory that's playing out where the incentive to stake longer and for bigger amounts increases, with this system.
yeah, I can see that. I can see that. I understand that. Thank you. I think that it's certainly, we're starting to get towards more detailed stuff for sure. All right, so we talked about why people make the HTTs, RJ, right, and how they would do it. Now, let's briefly just describe what before we start showing things on the screen. Then I'll pull up the discounts or whatnot. But on the other end of it, the buyers of HTTs, what's the motivation? Their motivation, even though we've said it like several times, this is important to keep repeating.
Well, I'll start and we can fill in around that. Their motivation is native hex return. They want yield in native hex terms, and they want it specifically with an HTT that's different than, say, any other form of staking. They get a guaranteed, rigorous, fixed return that's not dependent on the actions of others. They've locked in a fixed rate of return in native hex terms at the moment they buy an HTT. So if you happen to look at the marketplace and you really think that's an attractive yield that you're buying at, the good news is nothing that the OA can do, nothing that the market can do, nothing that anybody else can do will change the return you're going to get. You buy it at a certain discount, it will return one hex. That pickup is locked in. And so you have that, which is a different form of native hex return than any other staking mechanism.
Yeah, you lock in the ROI on the buy.
One example for me, I had a stake end and I didn't feel like restaking because I wanted some liquid. Maybe there's going to be a bull market eventually. I don't know. So there was I think the HTT 3000 was paying a fixed rate of like 20%, which is higher than a native stake on time frame. So I just swapped it into HT 3000, made a better rate, and stayed liquid. So, I mean, that's just taking advantage of
One
one
of the use
particular.
cases, yeah. Yeah.
Here's another one for those that do speculate. There's nothing wrong with that for those that want to do that. This is the HTTs can afford you that possibility, and you can see it in the price charts, which we'll get to, I'm sure, at some point. If you buy an HTT at a 60% discount today, and in 2 weeks, the market tightens to a 30% discount, you could sell your HTT into that and have nearly a double on your bag of hex.
Yeah.
So the mere fact that you maintain a portfolio of HTTs and then watch their relative values change, you might decide to harvest some fast gains that came in and roll it into things that are cheaper, like other parts of the HTT curve. So that's just another reason why someone might get involved with HTTs is they think they can capitalize on the dynamics that happen. You can. In fact, you can see it in the price charts if we were to look at it.
Yep, we're gonna pull this stuff up right now. I think I've gone as far as I want with just like this high level stuff. So it'll start getting thick. We start getting into more of the detail for sure. Um, so one of the big questions that will come to mind for me, and I'm going to start there right away, is, well, wait a minute, this is just another token with, probably not enough liquidity, blah, blah, blah. And that I think that's going to bring us to another level of discussion for sure. So let me share my screen real quick and let's get this up here so people can see it. And let's just talk about the liquidity setup as it is today. Let me know if you can see this screen, okay?
Looks good.
All right, so I gotta make you guys small. You're too big on the screen. All right, so just taking a look at this is anecdotal. There's some more LP out there. I say anecdotal, but this is just like kind of gross numbers. We can see that I've gone to the Actuator Finance page. This is where I went, actuator.finance. And then I went to open the app, and I opened the app, and it brings me to a dashboard initially with a lot of information on it, which isn't probably the first place for people to start, but it is where we normally start. But I went to pools because I specifically want to talk about the liquidity that's out there. And what I'm seeing when I look at this is that this system has somewhere around $300,000 to $500,000 worth of liquidity. I didn't add it up on the system, which is pretty substantial. Right. Doesn't mean there's not slippage, et cetera, but I mean, it's pretty substantial overall for an ecosystem. Not every token out there has 500,000. And primarily the liquidity is with Hex. And so how would you describe your liquidity setup the way it is right now? And maybe probably, I mean, I can get into it, but I mean, what do you guys think? How would you describe this to people as to what we're seeing on the screen?
Well, my take is it's got enough liquidity to do fairly efficient trades with $3,000 to $5,000 worth of positions. If you were to translate that into what can I do, you can fairly efficiently with normally acceptable slippage, fairly small, do HTT buys or minting and selling at any of those 3 points on the curve and know you've got a sufficient pool to work with what today is probably somewhere around $3,000 to $5,000 worth of trade. Now, if you're somebody that's trying to trade big bags, this doesn't support it yet, but the protocol does. We just need thicker liquidity, which we think naturally should be attracted to this system because if you have the choice between holding liquid hex that's not earning something or holding hex that's still pure hex with pure hex exposure in something that is liquid but earns natively, that seems like a more attractive option. So as people begin to understand that, we think the liquidity grows. But today, you still have more than exploratory amounts of ability to capitalize on trade ideas.
Yeah, 100%. And I know for those who are watching that are coming in after the fact, right? This may look a little complicated. So what I'm seeing on the screen is we have these different types of HTTs, right? And there's just simply, and there right now there's currently three that are featured: 3,000 hex 3,000 day, hex day 5,000, hex day 7,000 HTTs, and there's varying amounts of liquidity, based on user actions that have been set up with those, but it's backed by hex, right? So these HTTs, they are in liquidity with hex. And then we haven't talked about the actuator yet, but we will. Actuator is a reward token in this system. It's linked up with both Pulse and hex. And then towards the
So,
bottom of the screen, we have the FUX pools, the PHUX pools, and there's another 80, $90,000 in liquidity there.
so your observation's a good one, and it's worth highlighting again because I should have mentioned that more explicitly. But HTTs are only paired with hex products. So in the upper section, it's HTTs to hex directly. And of course, in that hex complex down at the bottom, we include HTTs with each other plus hex plus the maxi deci products, which are still hex based. So the intent was if you're a liquidity provider, that there isn't any impermanent loss away from hex. And everything you're doing as you interact with this is hex based. So if hex 10x's tomorrow, all this stuff 10x's tomorrow, or give or take a little, depending on how the discounts squish around a little bit.
Hmm. Hmm. Well, and what I wanted to do is just get out of the way this idea that there is liquidity out there, just so people that are watching will realize when we look at the next fantastic bit of information that there is liquidity out there. There is the ability for, like you say, to reasonably do, perhaps those $3,000 to $5,000 trades.
And just to add on to that point is that there's the incentive for anyone with liquid hex to potentially add to these pools like C.
Yes,
And
yes.
because I think of them as stablecoin pools. I know it's not exactly the same, um, but there's levels. So if you have liquid hex, you want to earn a little bit more on that, you buy an HTT. That's fixed. You can stop there. Fixed rate, discounted hex. Then the next level is pair that with hex and provide LP to one of these pools.
Right.
Um,
I think that's important because of the zero impermanent loss. Well, close to zero impermanent loss risk.
mhm.
Well, that's right. And so when you think about the phrase liquid hex and you apply it to these liquidity pools, you'd realize those liquidity pools are liquid hex because
Oh,
everything
on
in
both
it
sides,
is
on both
hex
sides, yeah.
and it's liquid. You can pull it out and liquidate anything you want anytime you want. So you're only talking about what method of liquid hex you're going to hold in, the one that doesn't earn natively or the one that does earn natively.
Yeah, 100%. I think of it too because in HTT and a V2 pool or with hex, any pool actually, with hex, it's all hex, right? And so if the ratio changes, it's all hex, right? And I expect that the ratio over time, because I'm willing to wait until day 3,000, 5,000, 7,000, it'll all be hex, right? Whether it's through the market or redemption, where I send it back, for whatever reason, I turn it into hex, through through the protocol. So in this way, it's got the limited, impermanent loss risk. All right. So I think I don't see any questions about liquidity out here. I see Moxie's putting something out there. Okay. So I just wanted to establish there is LP. There is LP. All right. All right. So
Absolutely.
let's go ahead and of course there's more to the story because I'm given incentive to provide even more LP. But at the high level, there's helping. And so then when we go and we look at the dashboard, one of the things that pops up immediately is this section right here, which is the HEX Time Tokens. And this is what intrigues me because we have I keep saying it, this is what it all intrigues me. Um, so I assume you guys can see my shared screen and everybody's
Yes,
not
looks
seeing it.
good.
Okay.
Looks good.
All right. So when I look here, at first it took me a little bit to digest this, but I'm going to give you my viewpoint on what I'm seeing. So we already talked about this, the sellers of HTTs. Now I'm going to talk about the buyers of HTTs, right? And so when I'm talking about the buyers of HTTs, this is my go-to little panel to look at. What this is describing, I keep hitting it on my AMAs, my streams as well, is what you're able to say is for each of these HTTs, what the discount to hex is. Now, so if an HTT is going to be one hex in the future, I can actually get an HTT 7000 at a 62% discount. So I can get it at a 62% discount. I know, and this is how it's like a bond in my mind. I know that it's going to be one hex in the future. And so then the rest of it's just math. What's the ROI, total return at this moment? And this changes moment by moment, day by day based on trading. But it's 166% roughly. And I can divide that by the number of years. And now I know that, hey, listen, if I swap my hex into a 7000, because let's say I have liquid hex, like Boxy was saying, and I swap into it, I'm guaranteeing myself a 12% APR over the next 13 to 14 years.
That's exactly right. And that's the way to do the math. And that's the way to understand it is you're locking in that total return. That's what it's going to do over the course of time. It's going to go from, I mean, you could take yourself through a concrete example. Say, I take 1,000 hex and I'm going to go use my 1,000 hex, or better spoken, I want to go buy 1,000 HTT 7,000s. What would it cost me in hex? Well, you could look at that number there and compute how much hex it would cost you. And it would be roughly 380 hex. And then your 380 is going to hand you 1,000 because you had 1,000 HTTs at the end. So your bag of hex went up from 380 to 1,000 over the course of that time frame.
Yep, 100%. And so you can look at each of the HTTs and see, like I can tell you that I've been playing around a little bit with this, right? So I took my positions that I wanted in 7,000, and then I woke up yesterday or whatever, and I was like, oh, look at that 5,000. That's a much higher fixed APR. And so if I had liquid hex that I wanted to do something with, I might be like, I'm going to swap into the 5,000 because I want to lock in my fixed APR for the next eight years.
That's right. And that fixed is important because if you think about the actions of the OA here a few weeks back, where they obviously staked a whole bunch and pushed down those APRs, if you had bought the HTTs the previous day when these APRs were even higher, you lock that in the next day, all of a sudden, all the minting or the
Mhm.
hex mining, minting, call it what you will, APRs came down. You're locked in, didn't change a bit.
Yep, 100%. And so
And
so I'm with you on that because I'm looking at what the OA is doing, and I don't know what the OA will do in the future, but I do know this is I cannot get 17% APR by staking my hex right now. I cannot. And now I
Correct.
doesn't mean that I don't believe in staking hex. I'm keeping my ladder, and I'm going to keep it up because I think there's a whole different gameplay about being in and having my hex stakes. But there are a lot of people sitting on liquid. And this is one of the motivations for bringing this up and getting this out to people because they can earn possibly, more value while they're sitting on their liquid hex. And so why wouldn't I, this is me personally, why wouldn't I consider getting an HTT 5000 with my hex and locking in the 17%? And it's not forever. It's not locked in forever. It's just that that's what I'll get over time right now. And I may choose to do something different, or I may choose just to even hold the 5000s.
it's important, I think, to keep emphasizing the how this is analogous to TradFi. These are zero coupon bonds where you that and you can do zero coupon bonds. I had to learn it. It's you buy it at a discount and the APR is calculated when you as it goes up in its denominator. So these are you buy at a discount, you sell at 1 to 1. So that and there's like I don't know, trillions of dollars that's traded in these markets. This is zero coupon bonds denominated in hex. So you can do it. There's all sorts of advanced strategies in this thing. So like if you can do curve trades, say like you buy HTT 3000s are undervalued and the fixed APR goes up to like 50%, something crazy. You buy that, then the next week HTT 7000, the yield goes up on that because those are undervalued. Then you swap those for HTT 7000. So I don't want to get into all those details. I'm just saying there's like a huge market for this in TradFi, and this is basically the hex version of it.
Yeah. Yeah. Of course, I'm interested in this for myself, right? Because I'm personally trying to benefit, from taking advantage of Hex's yield and potential growth in the market, et cetera. But yeah, it's pretty interesting, right? Because you could, when this grows larger, which I have no doubt it will, it could begin to attract a different class of user.
Yeah.
Well, that's what we're relying on is the fact that you don't want to have a scenario where you got a bunch of winners and a bunch of losers because there was only one right answer and some people figured it out and the others didn't. Well, that's not a good system, really. A system is good is that it's a tool to let everybody manage their own variety of risks. People naturally have all manner of differing profiles and risks and circumstances. You just want to give them a fair, level playing field marketplace to be able to come together and each accomplish their respective objectives. And they might be very simple, like in the case of I just want some liquidity, or I just want to buy something that's going to earn me a native hex terms, or the complex, which are all these other things that can be done. But it doesn't matter. You're all coming together for your own individual objectives in a common environment. And that's where the machine begins to work for the whole community and allow
Mhm.
growth of capital.
And then an interesting question to ask. So we highlighted those discounts, Crispy. You highlighted them and noted like, oh, this would be maybe a good place to buy. The next question is like, why are those discounts where they are? Like, why is
Mhm.
the
Mhm.
HTT 3000 at a 27%, and then why the big jump to HTT 5000 and then the small jump to HTT 7? Um, so right now, because the system is like relatively immature, and it's still there's interesting incentives in like an early system. So some of those numbers are probably you don't want to read into them too much at this point. But as the system matures, I think we'd be more and more right to say that those numbers are giving us really interesting signal about hex staking. Because if one we saw the actions of the OA as was mentioned. It's possible that in a mature version of Actuator, that Actuator could have maybe been the signal for what the OA was going to do because if if for example like you saw a big difference in APRs between two time tokens that wasn't like easily explainable, it might be that the market's anticipating maybe an
Mhm.
increase in
Mhm.
OA staking or maybe a drop in OA or maybe he does something unexpected. But this could be kind of a prediction market per se for what the OA is going to do based on the size of those discounts because those discounts should approximate or the APRs should approximate hex staking APRs. And if they don't, then it might be saying something about, what the
Sure.
market expects to happen.
Well, yeah, in a perfect model, perhaps you're right. Meaning everything's seamless but so first off, the market moves with people. People are taking actions, right? So they screw everything up. And then plus the time frames are not like instantaneous, right? The market takes a long time to react to things. And so yeah, I'll take you from my take. I looked at this initially. I was like, why is it this doesn't even make sense. It even makes sense why these discounts are here. Why is it so discounted, etc. Well, I had to really like put my thinking cap on and go back to, okay, there's two different types of people involved here. Gross example. There's sellers and buyers. Yeah, as a buyer, this is what it is, right? It is what it is. Somebody did something in the market. Prices went low, prices went higher. It changed the discount. It creates a different APR. On the seller side, I don't know the motivations of all the sellers, but the sellers might be doing something. Perhaps they needed some liquidity for X, Y, and Z for a short period of time. They're going to come back in and buy their HTTs. It really doesn't concern me when I'm wearing my buyer hat, right? Because I'm just looking to lock in my reward, my yield, my APR.
Right. And maybe what the yeah, it's hard to you can't really like read the tea leaves and know exactly why those numbers are the way they are. It's just markets doing their thing. But I think as you just implied, one thing it might tell us is that there's just our system currently has a lot of HSI holders that are looking for liquidity. And
Hmm.
if
Hmm.
if if that's what the system is currently composed of, like that type of user, then we're going to expect bigger discounts on these HTTs because a lot of people are selling or taking out their loans and then selling them into the market. And then there maybe
Yeah, and they
yeah.
and they of course they think they're doing something that's going to enrich them or improve their position, right?
Right.
Whether that happens or not is a whole nother story, right?
Sure.
But that's how this discount ends up being created because I went and minted my 7,000s this week, and I was like, hey, I really believe an XYZ token's going to double. I don't do this, but I know that people do, right? XYZ token looks really like it's going to improve over, you could even say ink, right? Like, yeah, I think ink's going to 3x over the next month, right? So somebody might take their 7,000, swap it in ink. They might be wrong. Their idea might be wrong. Doesn't matter. What ends up happening is it creates more of a discount to Hex for the HTT 7,000s because they put sell pressure on and it brings the ratio down.
But then you have the other side where it's like at some point, like I personally will feel compelled to step in and be like that HTT discount is just way too low. Or sorry, well, it's too heavily discounted,
Yeah, too high. Yeah,
Yeah.
yeah, yeah. Getting the feel for that, sure.
Right. Right. So yeah, it's interesting.
Also, there's the other layer to this. I don't know if you guys want to get into this, but if you stake these HET 7,000s and 3,000 and 5,000, you can earn ACTR token. And
Ah,
HTT 7,000 does give more ACTR relatively to the other two. That's the first 3 years of the protocol to do a fair launch distribution of ACTR token. Then I think it goes away. Then there's no more supply minted after that. But so I mean, if I like think ACTR is in 3 years is going to be a great a great investment or whatever. I'm getting HTT 7,000s, getting as much as I can, and maybe spreading it out a little, but I'm focusing on that pool. So that could
yeah.
also be enough.
Yeah. Yeah, I think that's a good segue because I think that's where I want to head next with this because so we talked about the sellers, people who want liquidity for some reason. Now we talk about buyers who are looking to improve their situation, by getting exposure to more hacks. And so, what do you do when you have these HTTs, right? And that's where you're talking about that next step. So let me pull that up because I think that's important. And this is where I get to my 100% APR that I talk about. So if we're looking at an HTT 7,000, see if my screen will show it right. We're looking at this 7,000 at a discount of 62%, and it's a 12% fixed APR, right? Well, now what I can do is I can go look at the actual farms. This thing covers my screen. Sorry about that. I can go to the Earn tab up here. It's up on the top left now because I made my screen bigger. And I can go to the Farms tab and I can go check out what I potentially could be earning in APR in the form of actuator tokens. And so these are three different farms, right? No different than other farms. And what I can do is I can actually go take my HTT 7,000s, go make a liquidity pool, V2 liquidity pool on PulseX between Hex and the 7,000, and then stake that LP here and earn another 70%. And so we're at 12% fixed and then 70% that comes up to about 82% right now. If we were to add those together, and sure, that's timing. There's a lot going on behind the scenes, but currently I can actually earn and am, somewhere around 82% APR, just from the fact that I had taken my 7,000s and matched them up with Hex and LP'd them and dropped them in here. And of course,
Let me
we did the math on 3,000 to be higher than that. But go ahead. I'm sorry.
while we're focusing on this, if I can suggest you go up to pools at the top there,
Hmm.
Because this is the
Hmm.
farming, but upstream, what you do is you go to, or I'm sorry, go to earn and then hit liquidity. So hit, yeah, farms. You're already on farms. You can add your liquidity here. You're not really creating a liquidity pool. You're adding to the existing pool over under actions. Uh, let's see where we're at here.
He's in the farms right now, Bill. You took a look.
Yeah,
Yeah, I mean, I get your point. I mean,
pools.
it's not brand new liquidity. It's you're going to add to existing liquidity there, which increases your
But you can
share.
do that right there from the app under actions. If you
Yeah.
click your
Yep.
actions
Yep.
button under
Yep. Yep.
boom,
I don't have any connections, but otherwise it would say, and I've done this through this process. I've added the liquidity directly here. Very clean process. So why would I do this? Maybe maybe I have a clip of $10,000 worth of hex, right? And so let's say I have a shine for the 7,000s. I might swap half of my hex into 7,000 and then create a $10,000 liquidity position, HTT 7,000 to hex. And I could do that right here after I did the swap. And I think you actually have a swap on the screen too, somewhere where I can actually do swap,
right?
click to the swap right here at the top. It's grayed out, but for anybody who can't see it, it's up here in the top right. It'll actually send you that process, or you can swap natively somewhere else, right? And then I would come here and I would do add liquidity and add that pool. And now I would have an LP token in my wallet that's $10,000 worth, 5,000 HTT 7,000 and 5,000 hex. Um, Now, because they're both hex, this is where we keep talking about this limited impermanent loss. Yeah, in the moment, people could be doing things in the market, but long term, both are hex. And so it's not like I'm going to expect to see, some sort of impermanent loss into HTT 7,000s and lose all my hex. Sure, I might end up with more HTT 7,000s, but they're going to be one hex in the future. In fact, I might where it might do better, because that position did that. And so as creating this position, there's a little bit of V2 action. It's somewhere in the 1%, 2% range, which is pretty normal APR for like a standard V2. But the magic, and I think this is maybe you want me to go to the farms now?
Now you go to farms because you've shown how you get liquidity into the pool, then you get a liquidity token and you come over here and continue.
Right. And that's where now I can come over and take that LP token and deposit it. And you can see the APRs that are listed on the screen. 86.9% for the 3,000, 69.3% for the 5,000, and 70.6% for the 7,000s. And so I can deposit that here and earn actuator tokens. And actuator tokens also have liquidity up, and I can go sell them on the market, right? And swap them into Hex if that's what I want. I can swap them into Pulse, but I can now be earning rewards right from the Hex itself.
Yeah, and Crispy, you painted one scenario where you started with 10,000 liquid hex, swapped half of it in HTT 7,000, and then put it in the pool, and then put it in the farms, and you're earning two. You have two sources of income then from the farms and from the LP. Another
Mhm.
path would be if you started with 10,000 hex, you'd make a stake ending on day 7,000, mint all the HTT 7,000, and then turn half of that HTT 7,000 into hex, and then put that in the pool, and then put that in the farm.
Yeah.
And that path, and under that path, you don't actually have to trade your hex for anything. So you don't have to deal with any slippage, in the pools. If you have a large bag, that might be more optimal to avoid slippage because you could just mint HTT 7,000s yourself. It might not, your APR is going to be different. It might be lower because you take a discount um, when you go to when you mint HTT 7,000s.
Yeah, yeah. There's definitely slippage involved, et cetera, size of position. But I think this is pretty cool what you're saying is because yeah, there's different situations. I have no hex. These aren't even all of the situations, but I have no hex, but I want to do this, and so now I need to go get both hex and HTTs, and that would look to me like swapping into hex and then swapping from hex to get the HTTs. Or like you said, and it depends on what you're trying to do position wise. I could instead have my hex or get more hex, go create the HTTs with no slippage, but it may not be the size that I want. So there's some hairs on that, right? Because there's only so much that I can get out of the out. It's not like I can get 100% of all my hex that I staked out in the form of an HTT, right? I mean, there are some details, and again, people need to go look at this and actuator.finance, you know, but that's another way. And
Yeah,
so, and then there's the case where I had this big stack of HSIs that I wasn't doing anything
right.
that are now not earning. And so I might be willing to take that little bit of slippage you're talking about because I turn them into 7,000s, let's say, right? So I turn these HSIs into 7,000s. Well, now I have 7,000s and I trade some of that for Hex to create the positions that I want to create in order to earn the 70% APR in the form of actuator.
All while still having T-share exposure.
Well, yeah, yeah, yeah.
Yeah, right. So you have three
Yeah,
sources.
because I can always get my HSIs back, because the HTTs I'll be able to get them off the market and
Right.
get my HSI back.
Yeah, exactly. And you
So
can
yeah,
avoid.
this definitely could devolve into 20, 30 different types of scenarios we could probably pick through, right?
Yeah, yeah,
And then it's worth mentioning, just to get it in here, is that we've covered multiple different revenue earning streams so far that you can pick up. And the last one that I don't think we've mentioned yet is you can then vault your ACTR and
Exactly.
earn HTTs again.
Yep. Yep. And I know some people have like a mousetrap kind of fatigue at this point. But this is pretty natural stuff. And I think, but here's a differentiation, natural in the form of like farms and whatnot. But here's a differentiation for this system, and I think you need to speak to it, is yes, actuator tokens are the reward token. However, they are not a down only token because there's a cap supply. Can you speak to that a little bit and how that's set up?
yeah. I could take that. So, the system. So it's not actuator doesn't need to be an indefinite reward token because the system doesn't depend on actuator. It won't. It's dependent on HSI users and markets. Participants making HSIs, making HTTs, buying and selling HTTs, and the actuator token isn't involved in facilitating that whole process. So actuator doesn't need to like prop up that system. But we do want to, we want a way to share the revenue generated by the system. And that's done through the actuator token, which is currently it's on a distribution schedule that lasts 3 years. And at the end of the 3 years, there will be no more actuator that's distributed to the farmers. At which point the supply is capped on actuator, and the farms effectively end. And not only is actuator supply capped, they're actually we expect a small decrease, a small amount of deflation over time because in order to we build C3 works just mentioned vaulting your actuator. Users who withdraw from the vaults too early experience a small penalty, depending on
Hmm.
how well, bigger, depending on how early they withdraw. So fixed supply, and then long term, it'll be like a small level of deflation is what we expect. All because the system doesn't have to depend on actuator, so we don't have to indefinitely inflate the supply of actuator.
So right now it's for the first 3 years, it's an inflationary token, which sounds bad, right? But the underlying utility is it earns HTTs, which ultimately earns hex.
Mm.
So after 3 years, that's its utility. But there might be other things that, I mean, I don't know. Maybe these guys are cooking up other stuff in 3 years. I don't know. So I guess, yeah, thinking of
Oh,
ACTR as a reward token, I think is a little bit limiting based because it does have that intrinsic value, if you will, of the more people, the more liquidity is in this system, the more HTTs are going to be extracted, the more fees are going to come. Maybe there's more people to share it with too. But that's just a documented utility. So it's all linked back to Hex basically is kind of what I'm saying.
Yeah, and of course, the primary liquidity for ACTR actuator token is HEX in the first place. And so it's going to be following that. And it's like a reward token in that, of course, you're getting it as a reward and some people will sell it. But there's incentive for me to accumulate it. Um, Now, that incentive is that after 3 years, no more is given out to anybody else, right? And as you guys mentioned, there's a deflationary effect from it getting lost or otherwise, right? Getting burned. But then long term, right? What I'm doing with those actuator tokens is I'm dropping them into these vaults, and these vaults are fed HTTs, right, from people minting the HTTs. And so there's a 1% fee. We didn't really cover this, but there's a 1% fee when people mint their HTTs, and that 1% fee is paid out to those who vault the actuator. And so long term, after you take the training wheels off, right, and the system's been set up and is running for the 3 years, I have my actuator tokens. I still am able to earn HTTs. And so for me, there's a benefit to getting as much of the actuator in place as possible early because I effectively can pay a portion, maybe even, I don't know, depends how big it gets, pay a portion or even all of my HTTs back just by the fact that I have actuator tokens in the vaults. I mean, I'm extrapolating, great performance and all this other stuff, but I mean, there's just this idea. It certainly would help because now I'm earning HTTs,
Right. Well,
which
you've
are X.
identified it well, which is right. It's the revenue sharing token, and you are earning the HTT. So it continues to benefit from the success of Actuator, which is designed to promote the success of Hex. So it becomes a bit of a flywheel. The more successful one is, the more successful the other, and it feeds back, and all of that translates to larger use of the protocol and thus larger HTT revenue streams to the fixed amount of ACTR holders as
Let,
of the end of the farming.
let's adjust. Is it called the lexicon? Let's adjust the lexicon. I think that name resonates with me a lot better than what I said, which might have been not correct. Revenue sharing token. Right. I think that would be for our vocabulary a much better approach because I think that more clearly identifies it. Because yeah, everybody. Because I'm telling you that I had this opinion. I'm not. I mean, I think what I think when I think it. And I'm not really filtered. But originally, I had no understanding what actuator was. People were running around telling me you need to buy actuator. I didn't know what the hell it was, but you know, and so then I just erroneously described it as it's not a down only reward token. And so let's upgrade my worldview. It's a revenue sharing token, which it didn't even click for me that would be a great description for that until you said it.
Yeah.
Well, and I like that, especially in light of something Boxy pointed out. It's not less than a revenue sharing token, but it's possible there are other uses and
Oh yeah.
use it as the currency for other things that come up in the future. So as it stands today, it's not less than a revenue sharing token. It is that for sure. And then other possibilities could emerge.
If you want to just, if you flip over to the dashboard, there's the list there in that actuator metrics table on the left side. You can see total hex time tokens. And so, roughly 68 million hex time tokens have been minted. There. And so you can kind of do, back of the envelope math. So 1% of all those tokens went to actuator tokens. So 680,000 or yeah, I guess, approaching the order of a million hex time tokens will have been paid out to actuator holders. So you can kind of, quickly see, just the utility of actuator is driven by the size of that total hex time tokens number. And the system is kind of designed to really incentivize a rapid increase in hex time token quantity in circulation. So yeah, so actuators revenue is will increase as more hex time tokens will increase.
And I'm just to add on to that, just mentally, I'm just coming up with this too. If I plan to use this protocol and I hate paying fees, if I just buy some ACTR token and put it in one of those spots where it earns the HTTs that come through, the percent of the fees, then I'm in a sense paying that fee to myself
Right.
and earning what other people are, paying. So it's just mentally, I can just sort of like write that off, kind of
Mhm.
as you
Mhm.
alluded to earlier, Crispy.
Yeah,
Yeah,
that's a good.
it's always a long-term strategy with the hex, isn't it?
Mhm.
All right, so I think we hit all the high. Listen, we can go on with this for a while. I could keep going on. Like I keep coming back to why don't I have more, right? And so, but I'm always like a slow plodding approach to getting into things. What else before we wrap up today? What else do you guys want to show, or should I be highlighting on the website? What else should we be telling people about?
Maybe one other thing, and I might, speak to this more on other points in the future, but um, how does this unfold from here over the next several years? And it's worth being aware that there's a broader vision than just three data points of pools.
Mhm.
The protocol is built to expand, grow, and fill out such that at the end of year one, which is October, there'll be two more HTTs that layer in. So now you'll get HTT 4,000 and 6,000. They begin to fill out a yield curve. And then in year three, you would get the first of the longer ones that would then be HTT 8,000. And that's discussed in the docs. You can look at it. But at some point, the reality is the community can create any HTT it wants and provide its own liquidity. So you'll have a full yield curve of HTTs according to how it wants different spots of the curve filled and who can provide what liquidity to it. And that's when you get a very efficient set of, right now we have a short term, mid-term, and long term so that we can balance the trade-off of the number of HTT pools with the liquidity available in them. You don't want to start with too many and they have small liquidity in each. But this is a bootstrapping effect. It's worth seeing that in time, the success of the whole project and its benefit to the community is that it's going to launch this fully developed yield curve all the way out. And there'll be a lot of nice, elegant ways to manage the risk in your portfolio or adopt innovative new ways to invest in HEX.
Yeah.
Yeah, I look forward to the possible onboarding of larger entities, right, through this process. And how I see my role in that is by taking care of my business and what I want to do, which is to have more exposure to Hex and accumulate more Hex and participating. That naturally would be me helping to build up liquidity, by participating and getting the HTT 7,000s or whichever ones and putting that liquidity in, which gives a broader base, which means there's a higher minimum, or maximum number of amount of swaps. So instead of maybe 5,000, we're talking 20,000, right? I'm not that big, but I mean, with the growth of the system, right, that we'd have enough liquidity out there that supports that. And now all of a sudden, a big entity can be looking at, a $20,000 swap and maybe a 50,000, 100,000 in the future, right?
That's right. Does everybody, all the participants, naturally do the things they want to achieve that they're incentivized to do on their own? The collective activity of all those folks build this out naturally, and it becomes a bigger flywheel to support bigger operations.
Yeah.
Heck,
And then, on the the technical side, there's a few things we didn't fully hit on, which is maybe okay. I think we've realized with the more streams we do, there's you we don't want to, give the fire hose of everything to the listeners because that could be tempting. Um, I guess to just comment on a few other things. One thing is that your stake, when you make a stake, or if you have an existing stake that doesn't actually fall on the end days of those HTTs you see there. So we have, those HTTs mature on days 3,000, 5,000, and 7,000. Your stake, if it doesn't fall on one of those days, it doesn't mean you can't participate in the system. It just there's extra limitations placed on how many HTTs you could mint. So just know that you could still participate even if you have stakes that don't fall. There's just extra, as I said, there's due to the way the hex staking mechanisms work, we have to place additional limitations on that. So that's something to keep in mind. Another kind of important area is thinking about end staking. This is a lot of people. If you own HTTs, you have effectively a stake in the hex that is yielded from those underlying stakes. And so making sure there's a orderly end staking process is a big part of this. And so we've built out tools, and obviously the smart contract facilitates community end staking. And there's actually a community end stake incentive such that if the original staker who delegated their stake to the system doesn't end stake on time, there's a small portion of their rewards will flow to whatever community member does end the stake. So you could it's meant to be kind of a system of carrots and sticks to ensure an orderly end staking process for all these stakes that back HTTs. So those are just a few other kind of important technical pieces to the system that probably worth mentioning.
Yeah, I
Yeah,
appreciate that.
it's a
Thank you.
little bit of an advanced strategy, but it's certainly someplace to go, maybe on a future call or somewhere else. But all of those HSIs from the Hedron auctions, those all work here just fine. They
Yeah.
have their varying different points. They'll just have a little bit more of a restriction on how much can be minted, but that's its own topic.
Yeah, I did reach out to Hexecutioner to see if I can get some sort of conversation going with him because I think he'd be a good person to kind of bounce this off of. Because I am involved with HSIs, I've been holding off on everything, just waiting to see what might come or not come. And so that hampered me a little bit with doing something with HSIs, but I think reach out to that community. Clearly, why would you be sitting unless they might have other strategies? But I mean, again, if they have no strategy other than holding the HSI, clearly they should be earning on it. In my opinion, in my opinion, they don't have to do anything, right? But clearly they could be earning on it, because some of them are holding some pretty large ones.
If they understand this, those ideas will flow naturally.
Yeah.
It's like anything, there's a hurdle to actually understanding it, and then you get the aha moments. So I'd love it if we could engage some of those kinds of folks who will then get the aha moments that were the inspiration for the project in the first place.
And you can be non-committal too. I mean, you can delegate a stake into Actuator and say, I changed my mind. I'm going to take it back.
Yeah, 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 yeah. You don't have to mint. You could just have it delegated.
Right.
You can undelegate it. Yep.
Or
Everything's reversible.
yeah,
Yeah. Yeah. I mean, it truly is. I mean, a little pain in the butt, in terms of not having nothing to do with your protocol. It's just I got to push buttons to get to one direction and they get there and I want to, unpack it. I got to go back the other direction. But it was simple enough to do. When we tokenizing is not a big deal. And then, actually your application works better than, the ICOSA app, in my opinion, right? And how it flows and whatnot. So it was easy to do that. I mean, going through the delegation process is pretty straightforward. Printing, I mean, doing the minting, very straightforward. I mean, all as expected, all as expected. But yeah, I think we definitely share that out. Well, that's one of the purposes of AMA. Initially, this will go out to my group. Perhaps later we'll send it out to other groups and maybe even put it on YouTube if you guys are okay with it. But to get this information in the hands of Hex people who really need to know about this, right? They should know about it. They don't have to participate. It's DeFi, but it'd be great for them to be aware. Hey, listen, you could be earning right now on this stuff. So.
one thing real quick I think might be worth mentioning if someone doesn't listen to all the other stuff is if HETs get overpriced, then that's a great opportunity to maximize your T shares because then you have you make a stake, extract HTTs, sell them for Hex, make another stake. So if people just want to maximize T shares,
Yeah,
there's
there's a
better.
definite, yeah, depending on what the market's doing, yeah, right. There's that opportunity. Mm.
Yep, definitely.
I'm gonna go ahead and hit stop recording. Hey, thanks for everybody who joined us on this stream, and also for anybody coming to watch this later. I appreciate it. And if anybody has questions right now, drop them in the chat, and we'll see if we can answer them. But for the official recording, I'm just gonna go ahead and stop it now.